Hey everyone, welcome back to the channel. Today, we're diving into a question that's probably been lurking in the back of your mind if you're investing with Wealthsimple. What happens to your money if the company itself goes under? It's a valid concern, and we're going to break down exactly what's at stake and how your investments are protected. Now, before we jump into the specifics, let's understand that companies like Wealthsimple act as intermediaries. They provide a platform for you to invest your money in various assets like stocks, bonds, ETFs, and sometimes even crypto. They handle the trading, rebalancing, and often the investment advice. But what if this platform itself encounters problems? What if Wealthsimple, for some reason, ceases operations? The good news is that your investments themselves are generally safe, even if Wealthsimple fails. Here's why. Your investments are held separately. Your actual investments, whether they're stocks, bonds, or ETFs, are not held by Wealthsimple. They're held by a separate custodian, usually a major financial institution like a bank or brokerage. This custodian is responsible for safeguarding your assets. Regulatory safeguards, financial regulations in most jurisdictions have strict rules about how brokerages and custodians handle client funds. These rules often require that client assets be kept separate from the brokerage's own assets. This separation is crucial because it means that even if Wealthsimple faces financial difficulties, your investments remain protected and can be transferred to another brokerage. Insurance coverage. In many cases, your investments may be covered by insurance programs like the Securities Investor Protection Corporation, SIPC, in the United States. SIPC provides protection for up to $500,000 per customer, with a $250,000 limit on cash. This insurance helps to cover your investments in case your brokerage goes bankrupt. What happens in a Wealthsimple failure scenario? Now, let's imagine a scenario where Wealthsimple does indeed encounter serious financial trouble. Here's a possible sequence of events. Financial distress. Wealthsimple might face financial difficulties due to various reasons, such as mismanagement, fraud, or significant market downturns. Regulatory intervention. Financial regulators would likely step in to assess the situation and protect investors' interests. Custodian takes over. The custodian holding your investments would likely initiate a process to transfer your assets to another brokerage firm. You will be notified about the situation and guided through the transfer process. You might receive instructions on how to open an account with a new brokerage and have your investments transferred seamlessly. Potential challenges. While the overall picture is generally positive, there are a few potential challenges to consider. Market volatility. If Wealthsimple fails during a period of significant market turmoil, it could complicate the transfer process and potentially impact the value of your investments. Complexity of portfolios. If you have a complex portfolio with numerous holdings, the transfer process might be more time-consuming and potentially involve some minor disruptions. Emotional impact. Even though your investments might be safe, the failure of a company you trusted can be emotionally unsettling. What you can do. Regularly review your account statements. This helps you stay informed about your investments and ensures that everything is in order. Understand your investment options. Educate yourself about the different investment options available and the risks associated with each. Diversify your portfolio. Don't put all your eggs in one basket. Diversify your investments across different asset classes and geographies to reduce your overall risk. 1. www.vigormv.com. www.vigormv.com. Consider alternative platforms. Explore other reputable investment platforms to understand their offerings and compare them with Wealthsimple. While the failure of a platform like Wealthsimple can be concerning, it's important to remember that your investments are generally safeguarded. By understanding the mechanisms in place and taking proactive steps to protect your interests, you can navigate such situations with greater confidence. With that said, thanks for watching, and until next time.